Ducle, Deputy Governor for Economics Policy and Head of Financial Inclusion from the Central Bank of Liberia, and Mr. Chris Wallace, also from the Central Bank of Liberia. Gentlemen, you are welcome. Thank you.
Okay. Hello? Hello? Okay, good morning, distinguished guests, and good morning, distinguished guests and the presenter, as well as the AERC for facilitating such a core research on Liberia as it pertains to financial inclusion. This topic is very important. Again, my name is Musa Ducle. I'm here in my capacity as a researcher, not necessarily as a deputy governor, because I was not invited as deputy governor. I was invited as a researcher and discussant of this paper. And so just take me as a researcher from the University of Liberia, as the AERC knows me to be. And interestingly, I've benefited from the AERC scholarship from the master and the PhD level. And that I also, through the AERC, I lecture at Nairobi University in Kenya for 1 year before coming back to Liberia. So it is a very interesting moment to be discussing on this paper. So I will just give Chris Wallace the opportunity to introduce himself. Then from there, we'll go into the core discussion in relation to the paper just presented.
So thank you very much, Dr. Dugle. And also, maybe I was invited in the capacity of the Central Bank. And I'm also an instructor at the University of Liberia. And it is an expert and apprentice and you see on this podium to discuss that. So I work directly in Dr. Dugle's office, and also I've participated in a lot of research work. I will also tread on his path to congratulate the AERC, because whatsoever they are doing is helping to complement the efforts of the government and the Central Bank of Liberia to see how best financial inclusion and services can be rolled out to our people. So the paper that is written, we've gone through it, we see that it offers a lot of policy options, that which of course we can advance on the national level. Thank you.
Okay, thank you, Chris Wallace. I've taken my time to go through this paper from the introduction as well as the literature review, and then the discussion on the financial sector in Liberia, and then the methodology of the paper, as well as the findings. And so I would just want to say the motivation of this work is critical for reshaping and redesigning strategy to strengthen financial innovation in Liberia. Interestingly, the paper aims at assessing the impact of financial inclusion on household welfare in Liberia using the Liberia Household Income and Expenditure Survey data of 2016 and 2017. From the central bank perspective, based on the annual report just presented, you can see that this topic is typical and very important for informing the policy direction focus in terms of deepening financial inclusion in Liberia. The annual report, as I quote one of the sessions in the annual report, indicate that the value of mobile money transaction in Liberia has increased significantly by 10% from 281.7 billion from 251.4 billion to 281.7 billion in Liberian dollar. In US dollar, it has increased to 2.2 billion from 1.4 billion, representing 36%. And this finding, this analysis support the direction focus of the financial inclusion target to get at 50% by 2024. The good news is that the country has reached 52% in 2023, ahead of 2024, the 50% 2024 financial inclusion target. So we've seen that the objective of this paper seems quite relevant for Liberia in the context of critical importance for financial inclusion, for informing policy to enhance wide acceptability of mobile money. It is estimated, it is insinuated from the presentation that gender gap in terms of financial inclusion, the limited evidence-based research relating to household welfare in fragile countries as key motivation for the research. So we can see the motivation, the gender gap, as well as limited research focus in Liberia. Those are the key motivation. We also see that access to mobile money or the use of mobile money is not by itself a sufficient tool to addressing the overarching constraint to financial inclusion. There are other impediments that also inhibiting financial inclusion in terms of the use of mobile money as indicated in the paper. So the policy ought to be strengthened, enabling infrastructure need to be upgraded, and financial literacy need to be prioritized as a way of enhancing mobile money usage across the country. So the paper significantly attempt to answer the fundamental questions. And what are the fundamental questions? What is the adoption rate of mobile money services among male household and female household? And then the paper also asks a question, what are the main uses of mobile money received or transferred through mobile money? And then the paper also tried to look at factors that influence male and female head of household use of mobile money in Liberia. Then the paper, in terms of the question, also look at what are the impact of mobile money services on welfare outcome in Liberia. And specifically based on those research questions, my paper has come up with the following comments that we just want to highlight in relation to the paper just presented. And I think generally the paper is very good in terms of shifting the policy directions, in terms of how can we deepen mobile money usage in Liberia, how can we remove structural constraint in enhancing mobile money usage in Liberia. But I think the paper does not elicit the issue of financial inclusion limitation in the context of structural bottlenecks in the rural setting that could potentially affect access to mobile money. That means that it is important for deepening financial inclusion. The paper appears to be categorizing rural and urban use of mobile money into one cluster, which may not necessarily be the same. So it is important to decluster the rural and mobile money so that we'll be able to get more informative policy focus with respect to how do we address policy to enhance mobile money usage in particular setting, which may potentially make it difficult to design policy to encourage mobile money usage in specific locations, especially the rural setting. The paper is researching on Liberia, a relatively underdeveloped financial sector, and a lot of policy effort indicating a lot of policy effort have been instituted to strengthen the Liberian financial sector, which undoubtedly has been highlighted in the paper. The motivation in the introduction appears to be silent on theoretical issues. I expect the author to derive few motivational discussion from theoretical foundations that highlight financial inclusion. That would be very, very important. The paper referenced Liberia financial inclusion strategies of Liberia 2019 and 2024, without clearly highlighting the challenge of interoperability as an impediment to increasing the use of mobile money. I'm glad that the paper captured the statistics of the mobile money in Liberia, 36% using the Liberia financial inclusion strategy. That is very good. And then also indicating the target to be achieved, 50% by 2024. I earlier indicated that we are around 52%, even far ahead of the target of 2024, 50% target. It is also noted in the report that mobile money largely contributed to increasing the financial inclusion from 18% to 35.7% as indicated in the paper, and that is good. An overview of the financial sector in Liberia. The paper used a title, an overview of the financial sector in Liberia, when the paper significantly does not discuss all of the financial sector in terms of the specific product they operate and the characteristics. So I will recommend to the author to change an overview of financial sector in Liberia to the session that will highlight an overview of financial inclusion in Liberia. I think that would be very important for such a session to look at financial inclusion in Liberia other than saying an overview of the financial sector in Liberia, which is more deeper than the way it has been presented in that session. The financial sector focuses on bank indicator. The author highlighted that insurance, rural community, financial in the village, and loan association. What I see in this session relates the different financial sector and mobile money. It doesn't relate the characteristics of the financial sector in Liberia, so I think it will be important for you to change that session to overview of financial inclusion in Liberia. In terms of the literature, I may not want to significantly stress myself to look at the different sections in literature, which is well written, highlighting different theoretical foundations with respect to mobile money, significantly capturing empirical research. The literature review in the current form is well written. I've indicated capturing theoretical literature and empirical in support of the methodology. I'm glad to see that. I see a lot of research work in the literature concluded with positive implications of financial inclusion on food security, especially from the gender perspective. In terms of methodology on this paper, I think the methodology has shown that the author developed a conceptual framework. There's a conceptual framework developed in the paper to explain the impact of mobile money usage on welfare or household, flowing from a theoretical basis and an adoption of the estimation technique. The author indicated that they analyzed the impact of mobile money on household welfare in terms of amount of adequate household food provision, food consumption score, household dietary diversity score, using the inverse probability weighted regression adjustment to address the potential selection bias problem in estimating the impact of the use of mobile money. Of course, the selection bias has to do with endogeneity, where one of the independent variable could be correlated with another variable with respect to the covariant indicators. So that's why he's trying to indicate. And when that happens, it will give you biased results. So that will inform the basis for the author to use this probability weighted regression adjustment model to do the estimation. But what the author has not done is that the author has not provided a diagnostic analysis in terms of using diagnostic statistics to justify the use of this model. I would have loved for the author to use the regression analysis to show that biases so that we'll be able to inform most significantly justify the reason for using this model. I think it will be important for the author to look at such a direction. Another very critical areas I've analyzed from the report, which is very important in discussing the finding of the report, has to do with the construction of the variables. I've seen that the author has constructed several variables in the model, in the paper, but most of the variables constructed in the paper are not referenced to a particular research paper. I think it will be important for the author to indicate that if it is your own adoptions in terms of the particular variable use, it should be indicated in the table that it is your own adoption. If it is adopted from particular different research paper, I think it will be also good for you to indicate the sources of some of the variables you've indicated in the model. That is very good to be referenced so that will help you to provide a clear definition with respect to the various variables, and that will be able to help to guide your findings. What I see is more description of the variable instead of definition in the table. So you provided more description instead of definition. Perhaps you don't necessarily have to use that table to provide the definition, but you need a specific section to define your variables. Perhaps that could be in the appendix, referencing the appendix indicating that you define your variables. In case it is the author have indicated that, then the paper talk about adequate food consumption. I think it will also be important to clearly indicate what do you define adequate consumption. Based on the World Health Organization definition of food consumption, they use the relationship between food calorie intake and expenditure. Perhaps you can look at that, look at the food calorie intake expenditure so that will give you the food poverty line, and that food poverty line will be able to indicate those who are above the food poverty line. But if it is in the household income and expenditure, data as an indicator adequate, then you don't necessarily have to change. But if it is not indicated and there are different food baskets that has been consumed in the household income expenditure, I think it will be important to be able to derive your food poverty line. From that food poverty line, you can also be able to identify those who consume adequate basket of food or those who didn't consume. I did a paper in my research paper in Kenya in 2007, has to do with determining urban poverty in Liberia. I look at the relationship between food expenditure and then the calorie intake to be able to determine those who are food poor. And so perhaps you can try to see whether you can reference such a work that will be able to help you. But if the data that you receive indicate that the questionnaires indicate that you consume adequate food this week, then you don't necessarily have to change. You don't necessarily have to change. So go and look at the questionnaire in the household income and expenditure data to see what informs that particular indicator. I think it's very good. If it is based on consumption, was it possible? I've indicated that the author provides clear explanation on the construction of each outcome variable. That is good. The outcome variable is clearly explained. That one, there's no problem. In the table, the author should classify the household into different subgroups to inform the easy analysis of the finding. What I've seen is that the author tends to mix the different demographic indicators. You can see marital status somewhere down, then you see gender somewhere down. You can classify into different groups. I've provided some recommendation with respect to how they can be classified. For instance, for example, you can put age, gender, marital status. You can group them on a demographic indicator. Then you can put years of schooling and experience. You can group them on education. Perhaps you can look at urban, rural, western, softing, and duration of stay in the urban area. You can group them on a location. Then their own production and offline production, you can group them on economic activity. That will help you to be able to provide more informed findings in terms of the research you've done. But otherwise, the construction of the table is good. It's a very good startup. Then there's part of the research that's very important. You know, the author has the outcome variable and they have the treatment variable. The treatment variable is very, very important. And I see that mobile money is the treatment variable in the research going through the paper. I appreciate the construction of a treatment variable model, mobile money ownership. That is good. The impact of the study would have been more insightful if mobile money ownership was disaggregated by institution and individual. I think that would be important. So that you know whether it's an individual mobile money or it's an institution mobile money. But again, you don't necessarily have to change that indicator because you are using a survey data that have already been collected. So if you were not the one who constructed the survey data and the data has indicated that just mobile money usage and it didn't categorize it, you don't have to bother yourself to go too much to go and find what you have not seen in the survey data. So the key problem associated with mobile money is a terminal stage where bulk of the mobile money holder will seek to cash out. That's why it's good for you to look at the institutional holder of mobile money. If you have more institutional holder of mobile money, then it will minimize the cash out. Then the mobile money would have achieved its objective of ensuring that there's wide acceptability of mobile money across the different part of the country, and the objective would have been achieved in terms of financial efficiency. I think that is very, very careful. You should try to look into that. Perhaps the ownership of mobile money could have been disaggregated into regions. Now I've seen you have Western region, you have the different Southern region, you have the different region. But when you look at the table that you presented, that table doesn't have the region. So you need to go back to that table and then indicate the different regions, Southern region, Northern region, and what you have. So it's not indicated in the table. Then I also look at other variables. The reason why I put more attention to this aspect of the research because it's very important to your findings, and that we'll discuss later. And then other variable in the model, access to electricity is a good indicator you've captured because electricity is very important that determines how frequently people will use mobile money. The phone has to be charged. So once the phone is charged, then in a particular region where there's electricity, I mean, people are able to charge the phone and they will be able to use it faster than we think. However, there are other services one would have expected for the study to capture, including access to financial services, access to rural connectivity, access to mobile money agents. So it is also important to be able to inquire whether, in addition to electricity, there are access to mobile money agents. How closer do we have mobile money agents in those regions? I don't know whether the household income expenditure survey captured that, but I think it will be very important to look at other services within that can deepen the use of mobile money. But then if it doesn't, then you don't have to bother yourself because this is a secondary data you are using. It's not a primary data. So you didn't construct the questionnaire. So go and look into the questionnaire to see whether these variables are there. It will help you more significantly to enrich your research. Access to mobile money agent. Yes, access to mobile money agent. Duration of stay in village. This variable can be transformed into domain. But I think you have a duration of the stay in variable. You can transform that variable into domain, where you can have less than 5 years stay in variable. If it doesn't, then that can be a domain. You don't have to. You can have 5 to 10 years stay in the variable. That can also be another domain. You can have 10 to 20 years stay in the variable. You can have another dominant. You can have more than 20 years stay in variable. This is important so that it will give you an understanding in terms of the magnitude of how long the people have stayed in the variable and how the different years you stay in the variable has impacted on the result. So instead of just having locations and years of stay in variable, you can decompose it into different components. The critical aspect of the research I've enjoyed most significantly in your presentation has to do with the result and the conclusion. I think the findings appear to be more interesting, and most of them are in line with theory. The paper clearly indicated how mobile money is largely used for consumption and mitigating food security. This is largely true in a more poverty-entrenched environment. The summary statistics of the paper, when you look at the summary statistics of the paper, the data seem to capture more male-headed households, which is necessarily true for our African setting, because most of our African setting is sort of dominated by male, and so you find more male-headed households. So that finding is very good. Then you analyze factors influencing the use of mobile money among male-headed households and female-headed households. Here I see descriptive histogram you showing factors influencing the use of mobile money. This is good because it provides a clear description with respect to the use of mobile money. But what it does not clearly indicate is the level of significance. So it will be important to use some simple regression analysis that will help to improve the paper. Perhaps I would recommend that you use the probability or the logic, because you already have that treatment variable. Do you have mobile money? Yes or no? So that yes or no can be transformed into limited dependent variable, and that variable can be used to be able to look at the determinant of mobile money usage in Liberia and give you more significant result that you are able to analyze. Because other than that, you will just see all the different components in the histogram and think that they are all significant. They are all may not necessarily be significant. So that probably will be able to enable, it will help you to determine which variable is most significant that influence the use of mobile money in Liberia, so that will be able to support your result and finding. I've seen that your result also indicated that those who stay in the village longer, they are less likely to use mobile money, and the reason you get is that they are able to build social network, but they are also able to build economic network as well. So it will be important to be able to look at they could have other economic opportunity, not necessarily building social network that will inhibit them from using mobile money. They could have economic opportunity, perhaps they could have job. Stay in the village, contribute to stability, and that stability has economic, positive economic externality, and enable you to be able to earn, income, and then reduce the probability of accessing mobile money. Then you say you also indicate that in your result that you said household head as those who stay outside the household, maybe the head of the household who stay outside the household, those outside, they may not necessarily be able, they are less likely to use mobile money from the findings I've seen. If that is true, I think I've looked at the data. But it may not necessarily be the truth because they are outside the household, and so they are less likely to use mobile money. So you also need to go and check. You can use an interactive variable. If you're outside the household, are you employed? Perhaps you can multiply the two variables to see the interaction, to see those who are outside the household, whether they are employed. Because if I'm not employed and outside the household, I may not likely use mobile money because I don't have a job to be able to transfer mobile money or to transfer income to the family. So I think the results are good, but sometimes you try to use an interaction variable to see, what will be the impact when you interact two variables in a city. So I do agree on the economic activity you indicated in your report that those who own farm and those who are educated, they reduce the probability of using mobile money, because they have some economic activity or they have some level of economic potential that inhibit them from using mobile money. That funding is good. I can see that you reference so many papers, but other findings are not referenced to other papers. So look at other findings and see whether they are in conformity with other research as well. So that will help your research. I think the results should cross-check. Some of the results should be cross-checked. For instance, the finding that relate to the southern and northern regions. Somewhere in your report, you are talking about the southern region, then you talk about the northern region, there are more telecommunication. It may not necessarily be true. That one, it could be TEPO, so you need to go and look at that part. I can see it reads that the northern region has a large population and telecommunication company. This is I don't know which region is the northern region in Liberia, so go by and recheck. That could be a typo in your paper so that you can have that corrected. But I don't think our northern region, is it Monrovia, the northern region? Maybe Monrovia, I don't know, but I don't think Monrovia is the northern region that you refer to in the paper. It could be typo. So you should also look at that paper as well. Then in the paper, you also indicated that the western region is more urbanized, and the capital city Monrovia is located in the region, where I think it depends on what portion of Monrovia that's in the western region. So I think what would have been better for you to indicate here is that the western region proximity to Monrovia is closer, which could increase the likelihood of using mobile money, because there are mobile money agents closer to the western region compared to other regions. That would be better, other than indicating that it's urbanized and more urbanized and then located in Monrovia, close to Monrovia. So I think you have to look at that. But generally, the paper is good. This is a very good paper. It has brought a lot of very interesting findings that we can discuss. And then what I'm not saying in the paper, area for further research. I think it will be important for your paper to indicate area for further research. And there are many areas for further research that this work has brought out. For instance, if you don't want to look at institutional and institutional and individual access to mobile money, that could be an area for further research if it's not in the paper. Then you could also look at the different region, determinant of the use of mobile money in Liberia by region. That could be area for further research in your paper as well. And then other area you have the mobile money in your region can be the survivability using mobile money in area with limited access to financial services. That can be other area of research in your paper in Liberia, because your paper indicated that there are many regions in Liberia where there are limited financial services. But generally, I want to thank the author for this paper. It's a very good paper, and the AERC for supporting this initiative. Those are my initial comments on the paper. I think this will open the forum for more and deeper discussion of the paper. Thank you so much.
Well, thank you, Dr. Dugley. He dealt more in the technical aspect of the paper, but also I'm going to give an overview of what has been done, so that if we measure it against the finding of the paper, we know that the progress that we are making and how to incorporate also the findings of the paper in terms of implementing our policy options that we are to design. So first, the paper title, which is the impact of financial inclusion on household income in Liberia. And I see it delving into just one aspect of financial inclusion. Financial inclusion does not entail the use of mobile money alone. I would have loved to see the impact of the use of mobile money on financial inclusion in Liberia. That is what I would have suggested. The impact, because there are a lot of products and services and other infrastructure that are available to us, which of course we use. Take for instance like the Susu clubs. Also, we're trying to formalize it. That is integrating the informal sector to the formal sector and see what regulatory policy we can design and framework that we design for it to be acceptable. Microfinance institution, Village Saving Loans Association, RCFI, that is Rural Community Financial Institution, efforts that the central bank and the government has made over the years in integrating our people into these financial services. But overall, the paper is good. And over the years, the central bank and the government partner has implemented reform aimed at strengthening the financial sector based on empirical research. And this research work is also going to complement it. And other research work also produced and are yet to be produced will form part of efforts towards sustaining and the functioning of the financial sector in terms of improved access to financial services in a cost-effective and timely manner cost effective in the sense that if we have national platform that host some of these financial services that this institution can have least of cost in giving these services to our people, then it makes it affordable, and most people, I believe, will be integrated into using those services. For instance, if you are transferring mobile money, or if you are making mobile money transaction, the cost of it on the consumer, then a low-income earner, the cost of it on the consumer will be by much higher than someone who has within the income bracket of maybe 5 to 10,000 United States dollars, who may see it as being very infinitesimal to their transaction, because they look at transaction cost. Every economic agent look at transaction costs and be able to use the service that they want to use. So in taking a great leap to the financial inclusion, as the paper mentioned, the central bank drafted a financial inclusion strategy, and this strategy is available, which of course is referenced also in the paper, and the data in it are used to assess the level of implementation of the financial services to Liberia and to agents, economic agents in Liberia. The report from the survey provides information on gaps also, which of course this report has provided in terms of the utilization of the product, and also amongst gender, the gap that exists among gender, and then the gap that exists in terms of the utilization of the mobile money. And this research work just presented also is another effort intended to update the recommendations that will enhance financial inclusion in Liberia relative to current economic and socio-economic and financial dynamics. We know human behavior change over a period of time, so adaptation to technology may have occurred over a period of time. And the financial inclusion strategy is from 2020 to 2024. So there may be an update, and there will be an update on that. So if your paper go mainly into the specifics of it, its recommendation that will be proffered will be geared or tailored towards policy that will enhance the use of mobile money in the future. So the paper also recognized the infrastructure gap, and then the need for policy and regulatory framework to be enhanced to accelerate access to mobile money. And various literature developed also identify the reasons, as this paper did, the reason for the low penetration, which includes include limited access point in the rural areas, and lack of required documentation, as was presented in the paper, to open an account, collateral, requesting collateral to operate mobile money, and then limited financial capabilities of the population, limited access to electricity, weak credit structure, amongst other. And also, we need to look at it in terms of literacy. There's something called technophobia. You understand that? And you mentioned that, those are the older folks are not inclined to adopting to new technology. So that could be also an influence and a factor that influence that. As you say, you use the household income and expenditure survey, and also the same data that central bank used was the 2008 census. But if you look at the 2008 census and then the result that we went into seeing the level of impact that financial inclusion has made, we expanded more because we took into consideration commercial banks, those that are having banks account, all of those that are using rural community finance institution, those that are also using the Susu Club, those that are using the VSLA, those that using credit unions that are established and regulated by the Central Bank of Liberia. And technophobia means that, maybe in the village area, those that have cash out, or those that are mobile money agents, maybe those that have technophobia may even go to them and say, look, cash out my money. And if you went in your research work and asked that person how often you use mobile money, it's not that person that per se is benefiting from the mobile money, but the old folk that has come out to cash out. And because they don't have the platform, and the platform is not easily used by them, they are not educated to it, that is why they are not using it, but they use another platform, another agent of mobile money. Also, the central bank has integrated, has licensed also agents knowing the infrastructure deficit and some of the limitation in technology. Most of the big businesses that hold huge cash, the central bank was able to license those people so that they carry on transaction and banking activity. Although they are not deposit accepting institution, but they are licensed to carry on business activities in mobile money. And then also the central bank, along with the Ministry of Commerce and Industry, seeing the level of digitization that is evolving in the world today, is also liaising with Commerce Ministry in ensuring that indeed every business area own and operate mobile money, such that the huge volume of cash that circulate in the population can be reduced, and also it also mitigate against loss when it comes to your loss of your money. Once it is on your mobile wallet, it is safe. That, so that enhance awareness that you have flagged out in the paper. The central bank, along with Commerce Ministry, is working towards that. Indeed, it is good to know that the author, of the research paper, established a scope of mobile money that is contextualized to Liberia by cross-examining the role of gender in improving welfare of household in Liberia. But in doing that, I didn't see a clear distinction between what you generally classify as consumption, because consumption in terms of necessity for living and consumption in terms of leisure. So in the gender stratification that you did, so if you disaggregate consumption in terms of basic needs, then you eliminate that fact of leisure, which of course maybe the perception that we hold is prevalent among the female household. Then we see a clear indication of whether the consumption is tailored towards necessity of life or it is tailored towards leisure. And even in the male category too, looking at male come from work and you have to have leisure with your friends, and what you spend on mobile money, maybe for your little beverages and what have you. So the people need to bring out that. But the four fundamental questions that you measured, which of course Dr. Dukley measured, they were necessary for what the findings is tailored towards. But the policy recommendation offer, which is investment in other financial inclusion platform in a cost-effective manner, also being flagged out in a lot of research papers that have come out in Liberia. But in stratification of gender, we didn't see actually, because in the research work that was done, or the survey that was done by the Central Bank of Liberia, they took about 50.6% of male, and then they took 50.6% of male, and then they took 40 some odd percent of female, and they look at them. And besides that, they look at female headed household, and in terms of education and all of that. So equally, the services that are available in those areas, which of course depicts financial inclusion and not only mobile money, was also stratified in that manner. So I would like to see the paper, since it is specifically speaking to mobile money, to see the level of household, but your stratification was 835 enumerated areas, wherein you took some as, I didn't see the delineation between female and male, but it just, stratified the enumerated areas, and then 10 households per enumerated areas. And those households, what percentage of it is female and what percentage of it is male has not been clearly spelled out in the research work. So we needed to see that. So of the 835 enumerated areas, 10 households from each of the 835, and then you use a population sample of 350 men and women, not also disaggregating it. And if you disaggregate it between men and women, let's see it in political subdivisions so that the policy that will come out will also inform where mobile money is needed most, or where we need to place infrastructure and where we need to enhance policy that way, enhance the services that are already existing in those areas. So, like in the financial inclusion strategy of the CBL that you have referenced, it was more holistic. And what we look at, since indeed it was financial inclusion, it was more holistic, capturing all of the platforms that we are using. Unlike you, it is very specific, the impact of mobile money. So I would recommend the changing of that topic from the impact of financial inclusion on household welfare in Liberia to the impact of the use of mobile money on financial inclusion, such that it is specific. So central bank findings capture the number of households with bank accounts, because if you don't have, if you are not integrated into the formal sector, then we look at membership with rural community financial institutions, and we also look at your membership or the respondent with Village Saving Loans Association, microfinance institution, SUSU clubs, and use of mobile accounts. In that finding, we ask questions. Do you use mobile money? And 69% of the respondents, authenticated that they use mobile money. And do you use it for your own phone? That is the platform that exists. So we found out that 94% of the sample space of 5,000 plus, responded in the affirmative that they use mobile money from their own phone. So in the last 12 months, have you received mobile money from anyone or, mobile money? And then 86% of that, responded in the affirmative. Do you pay for utility services on your mobile account? 61% in that reference the payment of mobile money from, services from the mobile money. Do you receive government benefits or pay for government services through mobile money account? And 13%. Someone, let's say, that receive mobile money that is sent, 68%, said that. So also, Dr. Dukley talked about the infrastructure deficit. We also have to look at factors that are inhibiting the use of mobile money in those areas. That is maybe road network and also security also, because security is very, very important. So towards this, since the central bank has initiated developing and acquiring and the usage of a national platform along with support from the UNDP and the World Bank, we are looking at the issue of cybersecurity that may exist, whenever a huge volume of transactions come into play in the use of mobile money. So indeed, he delved into the critical aspect of the research work. So I believe this is, all of the criticism and that is given to this paper is mainly geared towards enhancing it, and also the policy recommendations that are offered are meant to enhance the information that we have in the financial inclusion strategy. So maybe most research work need to be done on, the impact of maybe the informal sector that we see in that entails susu clubs, how they have an impact on financial inclusion in Liberia, or the VSLA, or the microfinance institution, because people in a rural area, they may feel comfortable with whatsoever product that is available to them. And once they adapt to it, then we are not going to make history, judgment that people are not inclined to using mobile money in this region. But rather, what is available to them is what they're going to use for financial inclusion purposes. So, well, thank you very much, for listening.
Want to say thank you to our two resource persons for their feedback to this paper. We will now ask them to take their seat while we continue with the panel discussion. Then we will have the general discussion. For our panel discussion, we are going to have three persons. Our first person here is Dr. Cherry Williams, General Specialist, Star P, World Bank Project Implementation Unit at the Ministry of Agriculture. Please give her an applause. Our second panelist is Otavius Quebo, Deputy Country Representative for Program FAO Liberia. We made some technical adjustment in the name of the third person. So we have Mr. Benedict Hallison. He's the Director of Economic Policy at the Ministry of Finance and Development Planning. So we are going to give each person at most 20 minutes for their deliberation.
Gender response.
Who's going to start? Okay, the people at gender sensitive. So.
Good afternoon, everyone. I am Cheryl Williams. I'm the Gender and Social Development Specialist for the STAR project at the Ministry of Agriculture. So thank you to everyone. Thank you to the researchers and the team. And I would like to take this, my discussion from the gender perspective. I'm going to look at the gender side and of course, the food security aspect. So let us look at the importance of women in agriculture and in promoting food security at the household level and the national level. In Liberia, we know that research findings have shown that women are responsible for household food security in terms of access to food and availability of food, and also in terms of the utilization of food. Food security data that have been conducted have shown the fluctuating results of food security in Liberia from 2006 to present. And we have areas with high level of food insecurity over the years that have been getting worse, and some have been fluctuating. And we realize that one factor is not only location, but also seasonality. In terms of is time of data collection, in terms of food diversification, food preference also. I was discussing with one of the researchers in the office, and I told him that some of the regions where food security information has been collected that has been and disseminated as food insecure, I would argue with the team, the food security team, especially the VAM unit at the Ministry of and the Ministry of Agriculture Food Security Unit, that the time of data collection is very crucial to food security information system. Collecting data for food security during the lean period. The lean period is when crops are depleted, like household stocks are depleted, and the household is like using the barter system to obtain food and food for the household, and also leaning on secondary livelihood like fishing and hunting. So collecting food security data around that time is something that has to be critically discussed to understand the implications of the result. Now, looking at female-headed households, we understand that we have categories of female-headed households. We have adolescents who have either lost their parents and are heading the households. We have women of childbearing age, and we also have adults, aged women, especially widows, looking at their access to financial services. Now, it is true that financial institutions are central to sustainability in access to food, in food consumption, and also the food system. So globally and also nationally, we understand that women have fewer economic opportunities in terms of labor, formal labor and informal labor. And we know that informal labor has gone down over the years since the withdrawal of the UN, where cash for work was available for women, and they were prioritizing women, especially female-headed households. So I would also argue that in as much as digital financial institutions such as mobile money is taking over, we have to understand the alarming rate, the disparities between men and women in access to these financial institutions. The research focused on mobile money, and like Mr. Wallace said, mobile money is not the only financial institution. Women are more likely to lean over to informal financial services like village savings and loans and SUSU clubs, and that is what they understand, because women do not have the education. If you look at the education statistics of women to men, you will understand that in rural areas, there's a wide disparity in educated females, and also age also is another factor. So these opportunities that push the persistent gender gap in access to finance in Liberia has to do with we have to look at policy, and some of the recommendations that was made by the researchers show that policy discussion, our policy makers should have, this is a trying time for Liberia, because as digital financial institutions are growing globally in Africa, in sub-Saharan Africa, we see other countries moving forward in terms of access to digital financial services for farmers, for women that are custodians of our food security system. So our policymakers should ensure that not only looking at how to formalize mobile money system, but also like the policy, the financial policy of the government of Liberia, the financial inclusion policy that is looking at how to formalize mobile money. We also have to look at how to formalize, how to push forward Susu clubs, how to make them formal, how to train women groups in institutional development so they can have actors who will take control of financial services, how to structure the group, and how to uphold the group for sustainability purposes. Because we see that after the civil crisis, when there was an influx of international organizations that were actually pumping money into Susu clubs and village savings and loans, and also making available financial services for women groups, because to make sure these women have something, because with the absence of agriculture bank where these women can have access to loans, we see how village savings and loans played a key role in providing resources, capital for women who had dropped out of school, women who were widows due to the civil crisis, who are widowed due to the civil crisis, and also women who suffered from sexual gender-based violence, how they were supposed to pick up their lives after psychosocial training. So this study could also look at the social aspect with a more gender lens. I am suggesting, I'm recommending, that in as much as the gender gap was captured, but also we could look at the root causes of some of these gender disparities in access to finance. Education you mentioned, age you mentioned. However, these could go deeper into the social norms, cultural norms that are impeding women from moving forward in terms of taking ownership of resources, collateral, in order to obtain loans from financial institutions. I would rest for now and allow my colleagues to take over.
Yes, so I want to extend big thank you to the authors of this paper. I mean, this is the paper is coming up just one of the right time in our economic history, and where the whole country is moving towards, and gender. But one thing about this paper is, I mean, it is good. Theoretically, it has set the basis for a bigger contribution to the knowledge gap in Liberia, because this is not something that is common. Like at the Ministry of Finance, we just decided to introduce this whole annual economic review, but looking at it from the climate perspective. And we were also thinking about how do we do that, to measure how climate is also affecting gender. So the gender component is a big consideration for now. And when you come to look at it, like Dr. Doc said, you tend to see that we are about to see a very big breaks in this country when it comes to our economic activities. We got approximately almost 56% of women in agriculture. This number might even increase because we have a lot of young guys riding motorbikes and keke around. You go down to the rural areas, every time we go to do the annual economic review, agriculture is becoming a concern, because if you have a young boy or a guy who is commuting from one town to another and earning almost around $50,000 a day, there's no incentive of him going into agriculture. So you go out there, what you see a lot of old folks, particularly women, into agricultural activities. So I think with this consideration and the potential risks that we see evolving, it set the basis for us to concentrate more on how responsive we can be gender-wise in terms of our interventions, economic interventions, even social interventions, because they're going to be more like the bedrock tomorrow until we can rejuvenate the mentality of the young men, the young guys who may have interest in agriculture. But back to the paper. The paper set the basis for proper policy discussion, which is good. And I think it is, like some of the previous speakers said, it is more general in terms of the topic. But as you go read through the paper, you tend to see that it becoming focused, and the focus centered more around mobile money. And we talk about financial inclusion. Financial services are more, yeah, a lot, and so that is one point that I even noted in the paper. It's good. The methodology, like you said, some of the indicators you just mentioned in terms of variables we need to look at, or considerations, and measuring that or aligning that to, the methodology. You talk about the inverse probability weighted, regression adjustment. That has limitations, and part of the limitations of that is, which I did not see much in the paper, has to do with the consideration of confounding variables. Because a lot of the things she mentioned, they are confounders. So if you are using that, that approach or that methodology, you need to, the assumption about that methodology is that all confounding variable will be, all unmeasured confounding variable are considered. But in reality, not all confounding variables, are always measured using that methodology. So and that brings out some biases, leading to some of the indicators you just mentioned or consideration. Like Dr. Douglas said also, or Mr. Wallace also mentioned, so that is just one key limitations of that methodology, which requires some consideration. But if you keep the research focused only on mobile money, it may reduce that limitation or that bias. So it's just some food for thought. And additionally, let me just go down to the outcome or the findings or policy recommendations. I'm kind of a little confused. The policy recommendations are good, but if the paper is gender focused, I think the policy recommendation should be gender focused as well. They are generic, yeah, broad. So I was asking myself while reading this paper, okay, I'm a policy maker. Is this paper proposing that we have a gender responsive, financial inclusion strategy that will be in alignment with the national financial inclusion strategy, which I did not see in the paper. But it is something that worth seeing, because we want to, at the Ministry of Finance, when I'm working with my folks, we want to drift away from just this academic paper stuff and things. We want these papers to be actionable, something that we can take and run with and say, okay, we can sit with policy maker and say, okay, Francis and her colleagues did a research on this, and we think we can use this component of the research, rather than going back and asking for more money to say, okay, this research, this component is good, but we also need additional funding to bring the fellow guys back to come and to demystify it. Yeah, but overall, I think the paper is good. This is our direction as a country, and we all need to keep tag on it. And I don't want to dwell on the literature review because a lot has been said about it. But a key component that I noticed, in addition to what I just mentioned, is the use of the HRES, the Household Income and Expenditure Survey. This has limitation, because I think this is the latest from the Ebola time, if Wallace can serve me right. So it should have been for 12 months, but it was only done for 6 months. So that has limitation. But with that limitation, if you are going to gender will have given you this whole food insecurity research that they did, across the entire country, region by region, county by county. So if you are getting that data, and also try to see how you can integrate that data into the HRES, probably you have gotten some other information that might not be contrasting but could be contributory to exactly what you guys have really put in so much effort. So that is just few of my points, that I think that require discussion. But generally, at least some of the gap we have in this.
So by profession, I'm an agronomist. with the FAO, but Octavius had some short-term notice. He was invited to a meeting in Kenya, so he left over the weekend. So I'm here to represent him. So with the communication shared with Octavius, what I saw was, as a panelist issue to be discussed, there were 4 questions to be discussed. One was the role of financial inclusion in achieving the UN Sustainable Development Goals in Liberia and in fragile and post-conflict situations. So on that question, which is the first question, is first addressing the issue of financial inclusion in addressing or achieving the SDGs. So firstly, we want to say what is financial inclusion, even though the presenters of the research finding made mention of that. We say financial inclusion is the process whereby individuals and businesses have access to financial services to meet their daily needs in terms of financial services and product. Okay, so it entails the provision of good quality financial product and services that everyone can afford, and aim at providing an equal economic opportunity for sustainable growth. In terms of financial inclusion contributing to the SDGs, yes, the researchers spelled out for 4 key goals that financial inclusion contributes to, but in addition to that, we highlighted other SDGs that financial inclusion contribute to. Like we said, if farmers, like FAO deal with smallholder farmers in improving their productivity and production. So we say if smallholder farmers have access to income or financial security, they can be able to have higher yields on their farm, which contribute to SDG 2. That's one thing that we want to spell out. And then if we increase income and yields on farm, they will consequently reduce poverty, which contribute to the Sustainable Development Goal number 1. So that's something that we just wanted to highlight. And then again, financial inclusion, like the research finding highlight the disparity between male and female having access to financial services or only a mobile money account. We say if we prioritize financial inclusion, it will contribute to the SDG 5, which tend to ensure gender equality and greater economic opportunity that is involving mainly women. So that's a contribute to SDG 5. And then another thing that we look at and we agree with the presenter was having access to digital financial services enable rural dwellers or even urban dwellers to have access to water and sanitation, which contribute to Sustainable Development Goal 6. And then another thing in role of financial inclusion in achieving UN, the Sustainable Development Goal. We say if families have access to financial services, they can be able to pay for affordable energy. And this will lead to the achievement of Sustainable Development Goal 7, which ensure having access to affordable, reliable, and sustainable energy for all. And then if the rural population or the marginally excluded have access to financial services, they can be able to contribute to different business model, which will contribute to creating, like especially the SME, the small and micro enterprises. Once they can have sustainable businesses, the next thing is employing people. And once they employ people, means people will have access to decent job for all, which contribute to Sustainable Development Goal 8, which in turn will sustain long-term economic growth. And then the final SDG that financial inclusion will contribute to, we say that if farm families or rural households can have access to financial services, they will increase their income and then improve their financial reliance, which in turn will they will have access to economic and social opportunities, which contribute to SDG 10. So these are 7 different SDGs that we've highlighted, that if financial inclusion is ensured, they will definitely contribute to that. The next question that we're asked to address was the role of inclusive finance in Africa, inclusive growth, and the realization of the 2030 Agenda for Sustainable Development. Okay, so in terms of key talking points, we said that financial inclusion is central to economic empowerment in rural communities. Okay, but then we say that, like previous presenters indicated, that the current structure in place by our rural people, especially with Liberia, with specific focus on Liberia, we say bulk of our population rely on agriculture as a means of livelihood. So if they are to contribute, means they must have access to financial services, which entails this financial inclusion. But then we say currently there are some policies that bar them from accessing. One is the Know Your Customer regulations that are with the former financial institutions. Like we work in the agriculture sector. What we've realized that most of the agribusiness enterprises that tend to access loans find it difficult. One, most of the loans or credits that are available in Liberia are only targeted to these SME that do short-term trading. Because if you access credit, you are asked to pay or start repayment in 3 months. That can apply to agriculture. Agriculture, in most instances, like even if you are doing a short-term crop like vegetable, you will need nothing less than 6 months to be able to develop your site, plant your crop before you can achieve something. And then if we extend it to cash crop, which will take 10 to 15 years, so we say most of the financial institutions or the former financial institutions do not have credit that are really tailored to the agriculture sector. So as a result, it is just very, very difficult to provide loans for these agriculture agri-businesses. So the regulation of knowing your customer is somebody you dealt with before you work with them, how well they can repay, and then looking at the bank-owned regulation, like the repayment term, like as it is now with most of the businesses. You gave credit or loans, and you expect a kind of repayment in 3 to 4 months. In the case of agriculture, it's just not possible. I attended one forum where a commercial bank said, yes, they do offer services to agriculture, but you must be at the point of like 3 to 4 months at harvest. So who finance the input side, the production side? You only willing to finance a loan once the person is at the point of harvest, which is very difficult. So we say that if you tend to look at your Know Your Customer regulation and the cumbersome paperwork that is associated with obtaining a form of financial, like opening a credit, you need maybe a birth certificate, you need national ID card, or other type of paperwork which most of our rural inhabitants that are mainly involved in agriculture don't have access to. So as a result, they are excluded from this form of financial sector. So due to these different restrictions and regulations, they don't even opt to go for these financial services that are offered by the former financial institution. And then another barrier that we notice is the expansion of infrastructure. Most of our people, in terms of financial inclusion, they are located in the rural areas. But let's come to see it in Liberia. The major former financial institutions are located in the urban center, like Monrovia and the other 14 county capitals. And I'm just measuring 14 county capital, but if you really do a survey, you'll find out that not every county is even covered in terms of access to banking, the formal banking facility. So what happened to those other people, like your research finding found that 4 of the counties are excluded in terms of access to formal banking services. So that's a major problem. So those enterprises that are located there or smallholder farmers, how do they access any services in terms of doing formal financial transaction? So that's one major challenge that we have in Liberia, that is excluding people. And then we say the financial exclusion can lead to extreme poverty. Yes, how does that happen? Because most of these people that are doing their businesses or doing their farming activities don't have access. So as a result, they resort to these informal sector like the SUSU, village saving and loan, which is not really captured in terms of national data to really present. And in terms of contributing to economic development, they don't contribute to that, because if they were saving with function, they will be able to accrue savings, and these savings can be used as loans to other agribusiness enterprises, and that circular flow could generate more income and subsequently lead to economic development. So most of our enterprises or smallholder farmers are excluded from the formal financial services. As a result, it becomes difficult for them to contribute to the formal financial sector. Despite that, they are still involved in some informal savings, but these informal savings, in most times, they are not captured by these data that we capture, and they are not really contributing to economic development. Reach out to these people. And then another thing that we propose is like promoting financial literacy. Promotion of financial literacy, making people to understand what is it in terms of banking with a form of financial institution, what it is, what does it entails, what is so difficult about it. Let the people get to know, because as far as most of these rural people are concerned, you must be literate, you must have a national ID card and other stuff, birth certificate, which they don't want to go through that. With a SUSU club, you can just declare your intention, say, I want to join a SUSU, and you are part. Instead of filling out forms and other things with the people, the population non-financially literate. So we advise that providing that financial literacy is for people to understand the benefits and the drawback. And then another thing is the promotion or the empowerment of women. Like we say, in Liberia, the statistics show that male, female are like 50%, in that gap, approximately 50%. But in terms of, and with the in agricultural production, women play a more role in food production. Most of the food we consume locally are produced by women. But in terms of access to land, in terms of access to other resources, like if you want to obtain loan, you may be asked for a land deal, has some collateral, but many females don't have access to these things. They are part of a family that promote male having access to land deals, so as a result, they can access these formal credits from bank, because they are not the holder of the deal. So if you can, whatever strategy that can be used to empower females or youth to be driven towards saving in bank or having access to credit can promote economic development. Okay, and then we say you channel proposed saving into regulated form of financial institution and mobilize them for investment. Once you do that, like you encourage all of these people, whatever savings they garner, you can channel that through formal financial institution, and that can be on a revolving basis while they are saving. That extra saving can be used to give out loans to other people at the end of the day to promote economic growth. And then we say promote a decline in the kind of system, mobile money payment or using credit card. That in itself will encourage us to channel our monies to be saved through some form of financial institution instead of saving these monies on the payroll or in our houses that we can only use or bring outside when we are about to transact. Because once it is saved with some form of financial institution, it enters the circular flow and eventually it can be used to give out credit or loans to other people. So, if all of these things are considered, like we said, the day-to-day living consists of series of financial transactions, whether you use paper money or electronic money. So if all of these people, like the financially excluded in the case of Liberia context, most of who are our farmers, if they can enter into this chain, or we're saving their incomes or their money into some form of financial institution that will help to promote economic growth. So thank you so much.
Okay, thank you. We want to say thank you very much for your deliberations. So let's clap for these people now. They've done plenty of talking here. Okay, so we will ask them to take their seats. For the next aspect, we want to have a little interaction. We've dealt with different groups. The presenters were here to present the findings of the research. We have 2 persons here as panelists discussing the paper, and then 3 persons came as our panelists. So at this time, we want to have little interaction with all of you. So we will leave time for your own comments, questions, if you have questions to ask us, we will give you the time to do that. The floor is open, just show up your hand, we will recognize you. So I beg you be specific if you want to ask questions so that we can direct it to the individual.
Okay, thank you. My name is Aaron Slayer. I'm from the World Food Program. I have 3 questions. I don't know if that's okay.
Yeah. Do the first one.
Okay, so yeah, let me begin with the first one. It has to do with, by the way, I got the paper only this morning, so I haven't had time to go through it. I've been able to read just a few lines of it. But one thing that didn't come out, at least not in the presentation, is our definition of use. So I even had to speak to one of the presenters who told me that use, as defined in the context of the paper, is having a mobile money account. So my concern is that I don't know if the paper contended into the question of whether, because the paper goes on to say that having a mobile money account, using mobile money, contributes, to these indicators, food consumption and dietary diversity. So my concern is that the paper contend into the question of whether people are obtaining, most of the food they consume through mobile money use. For example, are they buying the food and related items, with money they got through mobile money? Because I could have a mobile money account, and yet and still I'm buying my money from cash I'm getting by other means. So it's very important because there's a potential leap of logic there. So it's very important for the paper to be clear about that. Like I said, I've not gone through the entire paper, so I don't know to what extent that question has been adequately covered. If it hasn't, the paper needs to reflect on that a bit. My second point.
Is that the first one?
Yeah, that was
let's take that one. Next person, please. Next person. So we take some round and then if the question is not asked, go back.
Thank you so much. I'm Darlington Doe, the head of monitoring evaluation from the Ministry of Agriculture. Thank you so much, Francis, to you and your team for the brilliant research. So the Ministry of Agriculture is also doing a project into financial inclusion in 8 of the 15 counties. So when we saw this communication, we're interested to form part of this discussion. And everyone has said it, financial inclusion is broad, and you were specific to mobile money, which is key. And we have worked with most of the rural areas of 8 of the 50 counties, and we understand the situation that is there. So we saw that one of your findings was the factors that hindrance of access to financial services in rural areas. So we were looking at gap for another research. We were looking at distances and time consuming to be able to get to rural financial institutions. So it created a gap for more investment into rural financial services, into where most of the rural people live, because we have up to 60 to 70% of our population in the rural area. So if we have to look at financial inclusion, we should also be looking at mostly the rural areas where we find bulk of this population. How can they have access to inclusive financial services? So it began an opportunity for us to do more research into what can be done in the rural area to ensure that these people have access to finances. Thank you.
Next person, somebody say.
Okay, I'm Anthony Kone. I come from Access Bank, Liberia, Limited. I just want to pinpoint few things when it comes to mobile tech. I saw all of the presentation on the research, but I didn't see the inclusion of findings from mobile companies. I don't know whether they were considered during the research process, because if we talk about financial inclusion, we focus on mobile tech. And we made mention of women inclusion, women household. How are we going to be working with these women to make sure that they are empowered in terms of the usage of mobile tech? Are we consider partnering or working or doing some research with these mobile companies who have the physical and accurate data on the usage of these mobile money services? Are we going to be considering them? And then when it comes to working with women in rural area, are we considering the inclusion of the CDA? Because working with rural women in terms of cooperative will be more effective, because Liberia women work more in group. It will be easy to empower them when you are working with women group, and that brings in CDA. So I hope that we can consider those. Are we having planned of working with mobile tech, like the Orange Digital Center, other institutions that are using the accurate data? I hope that will be taken into consideration. Thank you.
Do we have the ones addressed, or we take more?
Maybe, yeah. Let's take one more and then we'll turn to. Yeah.
Good afternoon. My name is Olive Brenda Cisco, and I'm the Financial Inclusion General Officer for the Rural Community Finance Project. I want to thank our presenters for the beautiful research, but I have few concerns. My concerns come from the general lens. You are looking at the challenges that are affecting their participation, especially when it comes to mobile money, but I didn't see anything coming out clearly from the agents of socialization, because we know to incorporate women into formal financial sector, there might be challenges they might face through their family, through religion, through culture. I didn't see the document coming out clearly with anything like that. Even we're talking about women or men, they are not homogeneous, right? We have people living with challenges and abilities that should be having access to financial inclusion. I didn't see the paper covering anything about that. So we're talking about men using mobile money, right? But we know that some of the G2 payment, government to person payments, are done through mobile money. So those are using mobile money more. Are they payments from government? So I wanted to come out clearly in that direction. Thank you.
So we will just go
Have the
to
ones addressed, then we'll take a few more.
Yeah. Francis and Billy, I think most of it refer to you.
Before I answer these questions, I would first like to appreciate the panelists and that of the discussion for their valuable comments or input on the paper. We know that these comments are really viable comments, and they are meant for the improvement of the paper. So I really appreciate your comments. As it relates to the question being asked by the guy from WFP, the use of mobile money to impact food security does not have to be that you are using to buy food. No. When you use the service, it can help to reduce for you transaction costs. It's unfortunate that you have not gone through the entire work. We'll show the diagram how this can happen, how it can translate into extra income for the household. For me, try to illustrate this. Let's look at the traditional means of sending money. That is, if I want to send money from here to Banga, I either maybe, let's say Banga is far from here to Raider. During those days, I either walk, right? It take me time, or I give to John. In giving to John, maybe John will say, oh, the money got missing on the road. And in terms of money, is that, when we speak of money, it's not just the liquid cash. Time also go with money. So the time taking to take this money from one location to another is also a cost. But with the use of mobile money, it will reduce that cost. In case I decide to ride a vehicle from your way radar to carry money to my sister, maybe I'll pay around 300, right? That's a cost. If I'm using mobile money, I transfer, that cost reduce. If that cost reduce, I get extra income. The extra income that I have obtained, I can use that money to be able to buy food or pay for my children's school fee or buy medicine for my children. So it does not mean you should pay for food through mobile money. When you use it, that is the effect on you. It helps to reduce for you transaction costs. So that goes to the question on the issue of the third question asked by my brother. In our recommendation, research, you cannot make it so broad. You have to narrow your research. We understand the importance of tech organizations as it relates to the adoption of mobile money. They are very important. That is why in our recommendation, we said that most men use bank and women use what? Mobile money services. How can you increase women access to formal banking services by increasing number of women that open bank account? We say we can relate to what? Financial service provider. And that also includes tech company and what? Financial institution that can help to build these people capacity. You cannot build women capacity by excluding the tech company. There's a work in here. You even see that the service offered by the various banks around here, like Echo Bank, the push and pull, the work in here with tech company. So, as per that recommendation, they will work in line with major financial institutions to help build women capacity. Another question was asked on the issue of cultural norms. You see, as per our data, as Dar rightfully said, we use what? Secondary data. So some key variables were not captured in that data. The questionnaire was not done by us. No. This was done by Legix. So when you check that data set, you won't see any variable on what cultural norms. But when you go through our work in terms of literature review, all these things are what indicated that cultural norms, these are barriers to access financial services by women. Although it's not a key variable in our analysis, but it was captured in the review of literature. Mr. Dua, your comment on issue of trying to do more research in the rural area. We are concerned on the fact that issue of financial inclusion is more severe in rural areas, and for future research, we will try to look into that.
3, 4. Next round.
Olive culture on what? Maybe maybe I forgot Jeremiah.
Journalist.
Because what I understood was the issue of cultural norms was that in our analysis. Yeah, go ahead. Sure. Yeah, you see. Okay, let me just start with the mobile money aspect. For the mobile money aspect, these are people who own mobile money account. Whether it's G2, whether it's other services, once you own mobile money account, you will capture in the survey. Yes. The issue of disability. You see, where we could find a clear general pattern was based mainly on issue of social economic characteristics that was captured on the board there. Issue of education, issue of number of spouse outside the household, like that. For issue of disability, it was not captured in our data set. So we couldn't have used it. Because it's like, it was not done by us. This data used was already collected by Legix, was on the internet. We applied for it based on what we know to study and what we were granted to use it. So all what you say is very valid. We know that issue of gender is not just male and female. We understand that. We look at other characteristics, like disability, adolescent youth, all these things. But these data were not in the data set that we were using. So we could not include it in our analysis. I hope you get that. Yeah, because it's that, you see, the call for this study, it was restricted. It was during the COVID-19 in 2021. So they said that before even you apply for this particular call, you should use secondary data. Because at that time, you couldn't go in the field for data collection. So if you do a very firm proposal, you don't have a data source, you could not accept your proposal. Yes. It was clear in the call, you should give us secondary data to use it. So you see, we have a lot of nuances with the analysis, but we don't have all the indicators. So we cannot force it. Yes.
Thank you. My name is Jackson F. Wolba, and I'm Zola Rock Community Financial Institution. The paper focuses on mobile money. Now, in my mind, mobile money has two different channels. One, a cash out. Two, and the researcher also indicated that some regions do more mobile money and some don't as compared to other regions. But my question is, which region do more cash out and which region do more cash in? Thank you so much.
Okay, thank you. I'm John J. Tier, the manager for Riverside RCFI. My attention is drawn to the availability of the services, especially when it comes to we the rural dwellers. As you may know, the network in Liberia, the GSM network, especially from us from the southeastern region of Liberia, you have to walk sometimes distances before you can even access network. Then what much more about accessing mobile money or getting mobile money into your service? So I do not know, but the project is so fine that I do not know whether they take into consideration the rural dwellers and some of the difficulties and challenges that are faced with, and how can we mitigate these concerns, especially where one has to travel from one point or a very long distance before you can even access either cash out or send money. Then another thing again is that the availability of the services around you. Sometimes you go to an area, the man will tell you, I got no cash on my phone. And sometimes you have to come as far as Buchanan before you can even access it. So it is a serious challenge. Though we agree the paper is unique, but we have to look at all of the challenges surrounding it. Thank you.
Quick announcement. Those that came from the rural areas that did the booking here, you have to pack up by before 2 o'clock so that the team they cannot incur in another cost. Is that clear?
Hello? Hello?
Yeah, go ahead.
Okay. I want to say a very big thank you to Francis and Billy for the study. I really don't want to go into the study any longer because I believe Dr. Dugley and Wallace have done substantial work in that. But there are a couple of things that I just want to look at. One of them has to do with the challenges that was mentioned, and the infrastructure challenges, the access to finance by specifically people in agriculture. And so I have raised a few conversations with few colleagues that I know from Central Bank. I just want to look at it from a few points. One has to do with the lifespan of the money. If we use mobile money, increase the usage of mobile money, the Liberian dollars will have a longer lifespan, which of course would be a good thing for the central bank, which will, normally print money after a very short time. Also, one key thing that I see as an advantage for the use of mobile money or electronic money, whether it's the mobile money or mobile wallet, whatever name you call it, could be the lowering of fraudulent acts, such as bribery, which of course when you have money in the suitcase you can easily do, but if most of our money is transacted through the electronic means, you will to a large extent reduce bribery and fraudulent financial transactions. Another thing I see as an advantage is that you will break down most of the banking walls around the country, because I will have the money on my phone and move with it and do transactions anywhere, anytime, which of course will also lower some costs of banking institutions. I also see as an advantage the issue of theft. To us who carried money in the suitcases, and especially rural women and farmers who took their money in suitcases, keep their money under their beds, mattresses, and things like that. No, you will not encounter theft because the money is on your phone. But the key embarrassment or the key hindrance that I see is the cost of doing transactions with mobile money. I said this in one of our meetings at the Ministry of Agriculture with these network operators. I said, look, I've just entered here and I intentionally did it. I did 3 different mobile transactions before going to that meeting. And so I gave them the result of the cost that that is cost me to do in US dollars and in Liberian dollars. And if an ordinary person who would go to the bank, take $10,000 from there and then use it without additional cost except for buying things,
But what happens, I take $1,000, I went to the market, and I have to buy 10 different items, $100, $100, and I have to pay $75 for every $100 that I spent. The money going to finish without me buying the goods. So I'm asking Central Bank, you have to work with with the other stakeholders, maybe the mobile money operators themselves, the internet provider, so that we can find a way to synchronize the cost to a minimum. That will encourage more people to enroll to the usage of mobile money. And that will, to a large extent, help the central bank. And also, I understand most of, except for few banking institutions, the banks, if you put your money into the bank, you cannot hold, you cannot do any push and pull from it. So obviously, it pull people away also from other financial institutions. But if all of the financial institutions, central bank can design a policy that I can, any bank that I deal with, I can do the push and pull from it, I can buy from anywhere, great. And so again, I want to say thank you to all of you. And Chris, I think I have to talk to you and then get your number. We have to do a lot of talking around this thing. Thank you so much.
Thank you.
So we'll take the last question and then you can respond.
Information on, that is why, the central bank along with its partner looking for a national switch. The interoperability that Dr. Dugley talked about, it may soon be, procure, the national switch and then be running. Because if you look at it, the two GSM companies that are here, their technology that they have adopted is not speaking to one another. You cannot transfer Orange money from, MTN money, mobile money. So the cost will be high. Much more, we are also looking at the supply side of it. Those supplier of goods and services for which, you will go there. If we develop the national platform to the extent possible, then the cost is going to be charged by the national authority and not the mobile companies that you're using. They only get a map called Omni. Quite recently, we've designed, a new currency, new family of banknotes, and we realized that indeed they has, greater resistance to, the humidity level that is existing in our country. No matter how you design a banknote, its lifespan is about 3 years, 3 to 4 years, if you use it well. And for that reason, since those monies, the lower denomination is circulating in vast majority of the population, this is why we decided to mint coins. And the coins are in what? $5 and $10. So again, if you look at the weight of the coin, you wish not to carry it so much. So you carry it for transaction purposes and maybe keep it in the bank, rather you do mobile money rather than doing it. So all of these conversations are being held along with the national government and the service provider. Again, the banks that you see, they compete for customers. So we cannot tell them the product to use. They bring the products, say it's a free market system, but the products that exist in the market, we adapt the regulatory framework that we use to monitor them and say, okay, whether the product that you have brought, whether, the services you're providing, is it conform to consumer taste and is not violating, the consumer, preference level or not. So that is where we adapt the regulatory framework and the requisite laws that we use to monitor them and see whether they conform to our national policy. So thank you very much.
Okay, so we're putting on the gender lens and taking the last two female.
Yeah, the last two. Thank you. Introduction, my name is Wookie Scott. Doing a discussion, we are using data from far away, in very most current data, which we could have obtained, which we could have obtained from the GSM company. They would have been able to give us an exact number of the women to the men. They would have been able to tell us the frequent users even in the female category and that of the male category. Now, there are things, the barriers that are making people disenchanted and moving away from using mobile money. Like he was saying, the rate. The rate is one of the things that I did not see anywhere in the presentation today. I did not see us talking about the availability or accessing the cash even when it's on your phone. And like I said, whatever we are discussing here today, the people that would have best wrote it up with you talking about mobile money, for now in Liberia, we have Orange Money and MTM. They are the one loading all the service. So we would have also been prudent enough to have them here. Maybe from their end, we would have understood some things, and we too could have given them our own disenchantment, and maybe based on the recommendations here today, they would have been able to better their platforms. So I hope that we consider these things moving forward, and most rather is not Liberia. We should be able to consider the people from the villages across the rivers where you don't even have, some of them have to go to 4 or 5 villages to be able to access cash from mobile money. Thank you.
The last female down there, at the tip end.
I wanted to see. Yeah. Okay. So thank you so much for the researchers and also all those who have contributed before me. I think that the reason why I put my hand down, I wanted to share whatever I wanted to say, because there is so much that has been talked about on this, especially the challenges to the use of mobile money. It has so many importance, but then the challenges makes it difficult, right, to assess. So I'm wondering whether the researchers were able to capture the limitations and then recommendations have been given. For example, if I send money, and it has happened to me several times, I'm a program director and I work with communities, especially women in the interior, in the rural areas. I send money by mobile money they cannot access. For example, I have a group in Salaye. I send money by mobile money to them in Salaye. They have to travel all the way to Banga to get the money. But then, the limitation on how much to get in a day is also an issue. Sometimes, the money agents go out of US dollars. Most times. And then you have to take the money piece by piece to be able to use. So I hope that these challenges have really been captured and then recommendations formulated to be able to make us to use mobile money the way we want. But as of now, I hope that it's well captured. Thank you so much.
Thank you. So let's take, you got any response to the last two or series of comments?
Okay, I will start with the one that I mentioned about all using data from the GSM. For the GSM company, we could not use data from them. What they get as a data is not sufficient for our study. They don't capture data on consumption of household as per our rural indicators. When you look at our study, we have 3 indicators here. We have household territorial diversity, we have food consumption score, we have months of adequate household food provision. These things are not captured by GSM. So we will tell you the number of male that have access to mobile money account, number of female, the volume of transaction like that. It does not capture it. So for that, we could not use it. Another thing you spoke about, the issue of Moravia is not Mosorado County. I think maybe you are not really been fortunate to go through the study. This study covers the entire country, by the way. It's not just Mosorado County. It's for the 15 counties. That is why we decided to put the counties into categories. As you saw in the analysis down there, we got the Western region, we got the Southern region, we got the Northern region. So we put the counties into our various regions for our analysis purpose. So because if you capture a 15 counties within your model, that is very, very funny. You cannot do that. So what we do, we try to stratify the counties. Counties that are from maybe Lofa, maybe neighbor, and we put it in one category. Those from the Southeast, Sano, Grand Cru, that in one category. So the study is not just about Moravia. No. This is the national data set that was used. Okay, when it comes to the issue of access to mobile money services in terms of how much you transfer, sometimes you cannot be able to withdraw it. You see, your SIM card, you get have restrictions in terms of how much you will transfer or how much you will receive. Even me, maybe they have experienced that. So what you can do, you go to Roomstar Cell or Orange to help us to open the SIM card. They can expand the limit transaction. So if that is done, you can transfer $300, $400, $500 a day. But if that is not done, it means that maybe your SIM is set to 200 at the limit. So when you try to transfer above that, it won't go. Even another thing that actually was the one that I tried to transfer some money, and it was not going, so I went to Roomstar Cell off it. It said, well, your SIM card is not authorized to carry on this kind of transaction. So when you try to check that office, it can help in that aspect. In terms of access point, I spoke your issue about infrastructure, where I mentioned the southeastern part, where I said it can also serve as an impediment to the adoption of mobile money. It's true. Sometimes you still put money in the rural areas, but there's no access point. So that I feel discouraged to even mobile money account. Like it's almost like to even access the money, what I will incur is almost like what I receive. Like what someone says, like the fellow guy from rural said, go to way to begin to access money, very high cost. So with the CB here, I think with time, we will try to increase the number of access points as per the rural counties in Liberia. Also, we spoke about the issue of cash out and cash in. Actually, our research volume of transaction. Yes, to see how much money will transfer per day or how much will transfer as per this county, like that. It did not capture that. Yes. Okay, to just speak in addition to what I mentioned about the issue of access point, you spoke of the issue of the southeastern part of Liberia. And in my discussion, I mentioned that also in the southeastern part of Liberia are less likely to use mobile money than those in the northern region. So what I said is due to 2 points. I said it could be because of what? Limited access point, no info. Like what she said, if people in the southeastern part of Liberia, you send them money to access it. And besides the access point, that area gets very bad network. Like Bankoli was just doing some research. To even send our data was an issue. You have to come way the data. So all these things serve as what? A deal motivating factors for mobile money. So if there's an improvement in infrastructure, as was in our recommendation, it will also help to encourage people in our region mobile money services. Because I will feedback my uncle coming, oh, I send you $200. But I cannot access it. Even when you And say, my phone on board, I can see the alert, the text, go on, go network. So I will be developed. Policy recommendation, if actions are taken, these yeah, I think these are the key questions I will ask.
Okay.
Okay. First, let me thank you all for those wonderful insights on our work. I'll just respond in general to a few. First, we acknowledge that we were limited in terms of data availability, and that's why there are some of the issues that we could not really bring out because of the limitation of data. And that, of course, provides an opportunity for better data collection. We can even explore the possibility of collecting panel data to see the trends in terms of mobile money use. So we acknowledge that. And then second, I really love the comments on disaggregating the data by different categories so that it creates or brings out a better picture based on different social demographic characteristics. I think my colleague and I will explore that and even try and develop something, an extract out of this paper, just by disaggregating the different aspects, and even just having a paper that is descriptive in nature entirely based on these different categories. And then in terms of also disaggregating the data, I think that's also good because I can give an example. In our country, Kenya, there's a high penetration of mobile money, but there's still a structural difference in rural versus urban, even in terms of utilization. Because, for instance, if you look at the users of mobile money, if you collapse the category of sending and receiving, you'll realize that there's actually a big difference in terms of usage. You tend to find that people in urban areas prefer mobile money to pay bills or buy goods. We have the option of pay bill, buy goods option compared to the rural areas. So disaggregating this data set into rural, urban, gender, age categories, education level, locations, I think will bring out better results that can be able to better inform policy, and we'll be able to work with that with my colleague and see how to do that. Otherwise, thank you all for the very insightful comments, and we'll definitely implement it to make this particular paper better. Thank you.
Okay, thank you very much. At this time, I want to quickly give some recap of some of the things that were discussed by our discussant and the panelists. They spoke of the value of mobile money, that it has increased both in the US dollar and Liberian dollar, that the objective is quite important for Liberia, the objective of this research, because currently Liberia calls for financial inclusion is actually a need and a demand. They also mentioned that mobile money is not enough to improve financial inclusion, but we also needed to look at strengthening the infrastructure. It was also mentioned that the paper needed to decluster the research between rural and urban setting. They also talk about the paper did not include other financial sector of Liberia. Therefore, the title, two persons spoke of that, the title of the research need to change, given that the case was more about mobile money use in Liberia. They talk about the inclusion of diagnostic progression in the analysis of the data, and also talk about reference of the variable use in a paper should also be shown. It was also suggested that we define the variables in the research, define what is full consumption for better understanding. And they also mentioned that if this was done in the questionnaire or not captured in the questionnaire, then that's okay. They talk about the classification of data across different lines, the economic activity. They talk about the location, the age, gender, etc. They also talk about the mobile money usage, whether you consider individual or institution use of mobile money. The issue of region, to make sure that the data captured in the table locate per region, and also the importance of saying which county falls in what region. The Southern, there was some confusion around there that we need to look at. They also talk about access to mobile money, example, access to mobile agent, the issue around electricity to charge phone, and continuing to use the app. They said the funding was good, and you provided more example. Cross-check some of the results, again, around the southern region versus the northern region. Anybody reading and not knowing the history of Liberia or the geography of Liberia may have some differences in terms of which part of the country you are referring to as north or the southern region. The area for further research, they mentioned few of that. The determining factor for further research, needed to talk more about that. They thought there were other areas that weren't mentioned. They also talk about, even though the study was more focused on mobile money, but making some reference to other institutions such as the informal one, the Susu Financial Club, etc. They mentioned literacy as a factor that influenced the use of technology. Those who were literate would turn more to the technology than those who are not literate, to also consider that. There should be clear distinction, also, we mentioned that already, between the different regions. The enumerated areas has not been clear. Again, they talk about that. The number of female or the number per region that you dealt with. The total number you provided, 830 something. They needed to know like how many of those people were from rural areas, how many from the urban areas, and which part of the region you concentrated this research. From the panelist discussion, there were other considerations there. They talk about women participation in agriculture, consideration of adolescents, especially for women, adolescents who also had individual household. The need to understand that women learn more to the informal financial institutions such as Susu. These were also mentioned again by one of our panelists. The need to consider those as part of the findings from the research. Formalizing other financial inclusion institutions that provide financial benefit, especially for women. Recommending that we look at some factor impeding women financial inclusion. We also consider age group in agricultural production. You have more old folks now in agricultural production than the young folks. Policy recommendation versus research focus. What specific policy recommendation do we have on gender participation in financial inclusion using mobile money, data from gender on food production per region would have helped the research, for example. Prioritizing gender equality in financial inclusion, opportunity for both men and women, understanding that women are more at a disadvantage. Access to financial services by vulnerable group as well should be considered. Then the rural household having opportunity to financial inclusion, which help in production. Formal financial credit institution is biased against farmers because of what? They said the repayment period is too short for them. Other proposals are, what are the incentives for saving or using financial institution? And that centers around creating the awareness on it so that rural people and illiterate people will understand what the incentives are if they save with or use financial institution. And that is tied to increasing outreach using informal financial institution, reduce requirement in opening bank accounts in rural area, and we should also relook at access to financial institution in rural areas. And then what we have here is provide incentives for individual providing access for financial inclusion in rural area. Thank you very much for your participation. At this time, we want to call on Francis Moyo, who will give our vote of thanks and closing remarks. Thank you.
First and foremost, Talonia, I think let me say a very big thank you to you. Despite the very short notice to have taken upon yourself to perform this task for us. Thank you very much. Again, I want to say a big thank you to the organizers of this program, the Green Landscape Initiative, and then the Africa Economic Research Consortium. Billy, thank you. Lenser, thank you. Lawrence, thank you. But we want to sign a caveat. Each time you're planning meeting for this country, it's always good to give people ample time. Or else you will have seen this room very packed because, again, people like to be informed way ahead of time. Most of the financial institutions, especially the GSM companies, they promised us at the 11th hour and they started to let us down. They were saying, and which of course it was difficult. KMTV, thank you, gentlemen. We call you at the 11th hour. I know it was sometimes up to the night hour we were behind you, begging you to please come for this program. Thank you, KMTV, for coming. Moluba, Francis, my namesake, you're no stranger to this business. I can remember when we were doing our oil palm strategy, you assisted us greatly. Thank you again for this professional piece of job. Very, very professional. We say thank you for the job. The criticism, the critics were very well in place. We will look at the document and see how we can reinforce it with some of these comments. For those of us who took time out of our business schedule to be here, the Central Bank of Liberia, the Ministry of Finance, Benedict, the other time I took you along, we went on a World Bank team and then we were discussing rights. Ministry of Finance, we always like to get you involved, and thank God you are here and you promised and you came. FAO, thank you. Access Bank, thank you. To those of us in the private sector, I say thank you. Thank you for coming. Though the time we sent the invitation, short time, the time we gave you 8 o'clock, where have some of you supposed to be enjoying your sleep, doing other things, you came. Yogi, thank you. We said thank you. It was difficult. When I grabbed you, Yogi, and we said, I said, we have to do this thing. And we did it. And we did it. Thanks to every one of us for coming and for showing up. Though we're discussing mobile money, to those of you who know that most of the time, the meetings we can go to, my sister from Gender Ministry, she was asking me, my sister from Ministry of Agriculture was asking me, how are we doing this thing with AB by mobile money? Billy, can you please answer that question? Will we pay them in mobile money? Because when it comes to mobile money in the country, like my controller was saying, after this meeting, if that all you will be paid in mobile money, it will take you 2 to 3 days before you get the money. 2 to 3 days. But please rest assured, you will not be paid through mobile money. You will be paid in cash. Thanks to every one of us for coming. And after this, the closing remark, you can come to the back. We will call you individually so that we can see how we can handle your transportation reimbursement. Thank you, and may God bless us all.